The following is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. Right now, you got the Dow up 11, Nasdaq's up 16, S&Ps are up 2. We have gold up 12.40, silver's up 23 cents. Bonds down 15 ticks at 150.26. King dollar down 11 ticks at 83.18. The euro is at 122.40. And, of course, we come out a bunch of earnings last night. Oh, boy.
Slew of earnings.
Slew of earnings, yeah, no doubt. And if we take a look at IBM, you know, IBM got into the 196. You're at 195. You know, IBM had good volume yesterday.
It did.
Not bad volume today either, you know. So what you're going to see out here, eBay, of course, transformed themselves. There's no two ways about that over the course of...
Now a bank.
Yeah, exactly.
You know? And a bank with a retail business.
It's even better. It's a bank that is just a it's just a royalty like.
Well,
right?
That's exactly.
Right?
That's right. Yeah, exactly.
You know, so that baby gapped up to 44. That swing is out there. It's at 43 or 48, and
see if it holds.
Yeah, well, you know, that gap underneath, it's a trip, no doubt. Small caps out here. What we have with the small caps, we got to, let's see, where did we go? Yeah, this is interesting. We were talking about this yesterday, and you know, they got weaker and weaker. And
exactly.
They couldn't make the gap. Yeah. You know, the gap, folks. The lows of the 6th were 81.03 in the I shares. We got to 80.74, and I believe the SPYs probably made it.
They're...
So the SPYs made it. The SPYs that 137, yeah, they made it. So the swing was 137.80. It went to 137.96, and then
I believe when the SPYs actually came into the swing point. Now the swing point being July 3rd, folks. You got to realize it was a shortened trading day. So
that's
it had
right.
80 million shares. So if you actually do the math on it, the straight math on it, it actually failed on volume, I believe.
Right.
Oh, you know, so if you just simply take, you know, 80 million.
Because we're closed at 1 o'clock.
That's right. So you just take 80 million, divide by 3.5 times 6.5, gives you an idea of the potential volume that you should be benchmarking it against.
That's crucial.
Yeah.
That's crucial to do.
Yeah, absolutely.
Because what happens, folks, is that particularly on the holidays, and then the biggest ones that you always want to make sure you do is on the Thanksgiving holiday and the Christmas holiday.
Yeah.
Because what ends up happening with Thanksgiving, you're going by 3.5 days instead of 5. And,
exactly.
Yeah,
exactly.
You know, big heads up. Gold out here this morning. So what we did with gold, you know, this range is still in there. Now, what you have this morning, this is absolutely, you know, they got, you know, gold. The pit close yesterday was at 1570. They ran it to 1591 this morning, but you know what? This is a little problematic, okay?
Yes.
And what the problematic is the aspect. There's only 71,000 contracts in there.
Okay.
I don't like seeing that.
Okay.
Do you know what I mean? What should be going on there, folks, is that should be banging out even at this time frame about 110, because what tends to happen, of course, in that market is the biggest amount of contracts are coming in the first hour.
Yes.
Yes.
Well, you know, I think what's really problematic, you know, and we just haven't gone back to it for a while, is the weekly chart. You know, that weekly chart on gold.
Yeah.
Still, you know, it's in a bearish mode, and what it's doing, folks, it's just simply hanging out at the lows.
Yeah.
You know, which it needs to do. It needs to, if it's going to try to bust out those lows, it actually needs to hang out there. Because to bust through that 1535 area, there's 900 and some odd thousand contracts.
No, it's building the cause.
So that's a big number out there.
I got to really wrap my head around that, because what you have, folks, is this: if the leg is going to be down, it's going to be dramatic.
Yes.
It's going to be dramatic. And I don't think it'll be a 1-to-1. A 1-to-1 will be $300.
It'll be 1 to 1.618.
Yeah. Oh, interesting.
I think.
Yeah,
you know,
I see what you're saying.
Which takes you right back to the 0.618 retracement, which is just kind of normal. But it's, you know, like you say, this is one we just really got to keep an eye on.
Oh, yeah. Big time. Big time. No doubt. No doubt about that.
Like everything else.
Yeah.
You get one eye here, one eye there, and we'll be all set.
Three-eyed monster, baby. So let's go take a look at the some of the high-volume stocks at this point in a low-volume market. First, we'll take a look at inside the S&P. And what we have inside the S&P, a Bank of America down 39, Intel's up 83. You got EMC up a couple bucks. Let's see, what's moving out here? Oh, you know what? Is it Walgreens finally made a made a deal with Scripps? You talk about
WAG.
Thank you.
WAG is the ticker symbol, yeah.
And Scripps has the upper hand on this deal. There's no doubt about it. But let's see what it did for the equity.
It was, I think, gapped up this morning.
Look at the gap.
Big time.
Look at the gap. Okay, so you're up 10%.
Big gap. Big volume.
Yeah, and so put this on a weekly for a second. See what we got here.
And they purchased what they purchased a entity over in Europe, I believe.
Well,
right?
they had done that.
Yes, they'd done that, and the market didn't really behave real well to that.
They didn't like that.
Yeah,
yeah, and that's going to be back down there. This is not going to do anything for it. Interesting, man. And so the news is, folks, I believe what happens is that Express Scripts is one of the largest, I guess, corporate facilities to push pushing drugs out, right?
Yeah.
And what ended up happening is that if you're insured under them, what ended up happening is that they had a deal with Walgreens, and then Walgreens didn't bite on the deal. CVS got all the business.
Yes.
And then Walgreens finally had a cave. Nothing like it. You know, small, it wouldn't be a duopoly. I think there's about 4 or 5 people in the business, but that's it. That's all there is.
Yes.
Our phone number is 877-927-6648. Let's go see if Larry's going to be going sailing sooner or later. Bonds. There she is again. She's rejecting the lows. Bonds are rejecting. This is unbelievable. So watch this one, folks. The 30-year bond got to 150.11 today, trading at 151 right now at only 143,000 contracts. You're going into, now watch this. This gets really cool because you're walking into 410,000 contracts and 479,000. So if I do a small 152.10, oh man, hey, 147. I'll make that 148, 152.10. That's almost 2.5 points. That's going to bring it up over the highs. Okay. Here we go.
Game's on, huh?
Hell, game's on, man. What I mean specifically, folks, is this. This has been in a tight range, bottom line.
It really has.
Going all the way up to June 1st.
Yes.
But now what it's done is this. You get a small ABC inside the larger ABC. You know? So we'll see so what happens is this. The 152.10, if it guns for that, and you get the volume, it's going to 154. 154, it's all over. 154.
Then you get 160.
160.
Then you get 160.
160 is easier, 154. Because when it breaks that level, that higher level, okay, you know, people are going to go, they're going to flip right out.
And what are interest rates going to be?
You'll have let's see, we'll be down to...
Minus 2%?
Hey, we're getting there. I think it would be 1.5 on the 10-year.
Oh, my goodness.
Yeah. Well, listen, you know what's amazing?
Hey, that'll keep real estate topping.
Yeah, no, big time. Huge. Check this out. What's happening in Europe right now for corporations, folks, now, it's happened in a few banks.
Yeah, they're paying to store their money.
You're going to have to pay to store your money. Whole new world.
Oh, my goodness.
Whole new world, baby.
Yeah.
Whole new world.
That is a trip.
Now, you know, isn't it? Pay to store your money. You know, gee, that.
I like that business.
Yeah, oh, man, that's amazing. Now, think about that. Think about the dynamic inside that. You know, they always said, you know, that you don't want to own gold because what ends up happening is there's a premium on it. Well, there's only a premium on it, folks. And they claimed how you store it. Well, if anyone knows it, you know, anything about gold, it's a joke. I mean, you can go buy, 4 inches by 10 inches and have $1 million.
Oh, the value.
And so what it costs us $30. The $30.
That's right.
$30 a year. Oh, really? $30 a year.
No question. No question about it.
That's pure propaganda. Some of the
really popping out there, Mellanox. technology. So that's one of the IBD stock, MLNX. That thing is up 34% this morning.
Oh, that's
$23. That's a nice way to wake up. Now it's got a 3-gap play.
Well, you know what's great is that
Got a 3-gap play
I love it. One of our tigers in the den. He had calls on it. I saw it this morning when I was doing the newsletter.
Okay,
and he's selling those
cool.
calls. Selling those calls and going the 4 Seasons.
I love it. That's a nice hit.
He did. I saw he's moving them out. Man, look at that.
Nice
what
job.
is it? What is this stock again? Okay, so let's see. Raises the record. Sales beat. Surges. Let me just see what this does. So you get mellow. Let's get the description here. So they design, develop semiconductor-based high-performance interconnect products. It's a chip designer. What a trip that is, man. Wow. Amazing. Let's go to John in Paramus, New Jersey. Hey, John, what's going on?
How's it going? I'm looking for JPM and GTX. And, hey, question, don't all gaps up get filled on the way down?
Gaps up.
Yeah, because your buddy there says they don't. Don't all gap ups get filled? And another thing, how can you be such a bear if you're so bullish on all these stocks? How are you going to hit 850 if you're playing you're saying everything's on ABC up? And I still want to know about all gaps ups get filled because it looks like they do, and your partner there says they don't. So there's a disparity there.
Sure. No. So, John, what I told you is that if you've got a change in business structure, you can have a gap that will not get filled.
Well, then talk to your partner there because he's always saying they do get filled.
Hey, you better talk to me.
They don't call me John Corzine for nothing.
I love it.
EDX and
you're talking too fast, man. You must be from New York and New Jersey.
Yeah, I don't understand how you can be so bearish and you're saying everything looks so good, though.
So hold it. Listen. Hey, listen. Be quiet, okay? Let me tell you something. You're not going to put words in my mouth first, number one, okay? Start with a question, a specific question.
How can you be so bearish if you're saying everything's so great, the stocks are looking so good? I don't see how you can
how are you going to get the 850? Fine. What stocks do I say are looking so good?
I don't know. You say IBM is looking good. This stock's on an 8.
Okay.
I love it. Okay.
So we'll start with IBM.
So we'll stop right there. Okay.
IBM's only up 10 points from last year. It was at 177 this time.
Yeah. Well, I never said IBM's looking good.
Oh, you didn't? You said, the volume's good, this, and this, and you're like, it sounds like you're pushing it out.
Now, hey,
you're not pumping this.
Okay, now listen, folks, this is what's really cool, okay?
How are we going to get to 850? What's crashing, the bank stock?
No, okay, so this is, what I want you to get is this, and this is really important to understand because this is how society does work. You can say something, and we all can hear something different.
Absolutely.
You know? So it's you stay right with us because I can understand how you can hear that too, John. Okay, you stay right there. We got Steve Rhodes, Tom O'Brien, all you tigers and tigresses. We appreciate you being out here, folks. We're gonna go back to John in New Jersey as soon as we get back.
I want to talk to you about gaps.
Perfect.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive The Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow up 28, NASDAQ up 17, S&Ps are up 2. We're talking with John, and we're talking about right now IBM. So I absolutely said that IBM came off the low yesterday with volume, but what I also had is that this is just a dead cat bounce, John. You know, we went.
Let me say, you know, Arch Crawford said, you know, this is a heavy time. Mars hit Uranus yesterday, and we're supposed to have 13 months of downtrends now. You know that guy, Arch Crawford?
Yes.
Yeah, you believe that we're hitting some volatile times right now?
I believe that. Is the question, did I believe what Arch is saying, or are you asking me where the market's going?
Yeah, well, you've been saying the market's been going 850. I think it's going to 666. But you sound too bullish to be bearish, I'll tell you that.
I see. Okay. So the bullish part you may be hearing, are we talking about real estate?
No, real estate. Yeah, real estate. But real estate's really gapping down every year. It's not really going up. The taxes
oh man, you're out of your mind. You're in New Jersey. You're in New Jersey. You have no clue, man. Let me tell you something. Even in New Jersey, forget it. Hey, folks, the bottom line is this. Okay, to think that real estate is gapping down, depending where you are in the country. Okay, let me tell you something. Real estate, where I am, is not only off the bottom. Real estate is going off the shelves, okay, like hot brownies.
We had numbers released yesterday.
Yeah, but like hot brownies. No, there's no two ways about it. I mean, I could show you. I have it factually. This is not speculation anymore, okay? When we opened the Tiger Fund, yes, I had the speculation. I had the numbers at the courthouse. I have the demographic. I have everything. This is fact now, okay? Yeah. I have the facts. And the facts are that we're not only off the bottom where we are, okay? We're off the bottom in a big way. And
you've got demand.
Yeah, huge demand.
The thing is, what you've got going on here is you actually have demand. It doesn't matter where it's coming from. You just simply have demand out there.
Well, listen, when you're buying them, 30 to 40% less than you can build them. It's a no-brainer.
Absolutely.
I mean, it's with a cash flow. It is absolutely a no-brainer. What you do have, okay, and this is where I can pitch it. Everyone can have the disconnect. It's like, what the heck am I saying? And there was a question yesterday that came up, which was pretty cool, in the afternoon show from a guy from Portland. And what you do have is this. My take on the equity markets, the exchange markets, okay, is that they're going lower. And why are they going lower? You know why they're going lower, folks? Because no one can trust them. They're going lower because the CEOs are ripping everyone off. They're taking the clients' money. The boards are taking money. Okay, it's 10 years later, okay? If you buy and hold, you don't have anything to hold to.
That's right.
Okay? So if you're a trader, God bless you, because you have some money. The reality to me this is wicked because we're in the public markets. But the public market versus the private market,
yes.
And the private market right now is where all the money's going to be made, period. And it's funny because people would say that, I feel like even real estate would be more risky. Now, inside the prospectus, I have to basically say it's more risky because that's when you're raising money, that's what you do.
Right.
But the reality is that, give me a break. You're buying a solid asset.
That's right. That's
right?
exactly right.
Versus,
that's right.
basically having trust in a board and a CEO that basically have paying himself $50 million. Now, that's in the short term. On the longer term, I am hoping that when we get down there, maybe some of this will get cleaned up.
Yes.
We'll see.
Yes.
The companies are certainly making the money, man. They're making the money, but they're not giving it to the shareholders.
Right.
They're taking it. Okay, we both know something. How did we get to the point, folks, okay, that you think a CEO or vice president is worth $20 million, $50 million, $60 million with someone else's money?
Yeah.
And now it'd be different if they just made you $200 million or $1 billion. How did we get to that point?
Yeah.
That everyone thinks that's okay?
Yeah.
That's insane. That is absolutely insane. With no skin in the game, forget it. Hey, let me show you something. I want to show you something in a gold company that is really cool. Rangel Resources,
yes.
Okay? Mark Bristow, right?
Yep.
He's the chairman.
Yep.
He started the company. Now, I want to show you something. This gets really interesting. And this had been one of the strongest gold stocks out there, period. Now he does business in West Africa,
yep.
Okay? So the risk has gone up on him, okay? Bottom line, but this is what I want to show you. This is how, to me, this is what a CEO is all about. If you're watching Tiger TV, I'm going to bring this up, and you're going to see exactly what he's all about and how much he makes, okay?
Yep.
So, bottom line is that when you bring this up, I'm going to show you first off just how much he has at stake, okay? And it's amazing, okay? This guy not only... Hey, you stay right there. I'll have all these numbers to come back. He makes less money, hardly anything, and then he has everything in stock. He puts his money into the company.
I love it.
Steve Rhodes, Tom O'Brien, you stay right there, folks. We'll come right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. You know, I can't grab those numbers right now, but the bottom line, folks, is that I believe Mark makes about $300,000 or $400,000 a year, okay? Owns like a huge amount of shares, and this is a company that takes in millions and millions and millions of dollars. Yeah. And that's the type of CEO that, the bottom line, is that you need in order to get higher price and keep higher price. Yeah. You know, because they divvy it up. They divvy it up with the shareholders who are the owners of the equity, you know. And when we do talk about housing, folks, if you happen to be an accredited investor and you want information about the Tiger Fund, and what the Tiger Fund's all about is that buying singles, renting them out, Pinellas County, Hillsborough County in Florida, amazing place. You can email us at tigerfund@tfnn.com. I'm going to be coming to Denver, Colorado, doing a presentation on August 6th. I'm going to be at the Marriott Tech Center, August 6th. And if you do want to come, just give us an email at tigerfund@tfnn.
And I think you got the endorsement of a guy named Buffett.
You know, this is what...
And a couple other guys.
So check,
a couple other big names out there.
Check this out. This is what's really wild about the business in general, is that the There's plenty of players, and there's large players coming in the business, and that's the takeout on the way out. What's going to happen? What you're going to see about 2 to 3 years from now, folks, you will see REITs.
That's right.
That
large
do have,
funds.
That's what you'll see. Now that is one of the takeout aspects of even what we're doing. Good, we get 100, 200 houses. Good.
Oh, absolutely.
BlackRock, Blackstone. You want to buy them? Here, take them all.
That's right.
No problem. Because what ends up happening,
already packaged up, positive cash flow.
Right, and what ends up happening is that they're going to take a lot less. Watch. If we go look at a REIT, this is what happens, folks. But this is where it gets cool. If you look at a REIT, we'll look at one of the biggest ones out there.
Yeah.
Well, okay, big deal. It pays a 2.5% dividend.
Yes, right.
But people will go for that. So they're going to take this from a private deal. They're going to put it on exchange, and that's where the spread is, and that's where the amount of money that can be made is, too.
Yes.
Because then all they're looking for is their percentage out of that. Right? So it gets intriguing in that aspect. That's the first part. Now, the second part, and this is just as good, which I really love, people are still absolutely paranoid on real estate beyond belief.
Yeah. No question.
And what that's actually what's driving the market, folks, because what ends up happening is that people that have owned houses and they got beat up want nothing to do with it anymore. And I don't blame them. That's what makes a market. They're saying, hey, you know what? I would just soon rent and have a lot of cash. And there's a lot to be said about that, too.
Yes.
Because depending on how old you are, what the demographic is, if you have the cash, you want to rent, hey, I want to go to Europe for 6 months. I want to do this. So there's a lot to be said about that.
Right.
Now here, this is the trip that's going to be interesting, folks, if in fact this is going to happen. My larger thought process goes like this. I think the ownership aspect of single families is going to change forever. Forever. Because what happens is this. Once the institutions get into it, which they already are.
Okay, exactly. Right, we know that.
And when you enter them at the right time, why would you want to sell them? Because the hottest choice that we're really going to have also is that, you only sell them when you start seeing other supply come online. Yeah, but substantial supply. But okay, I'm with you there. Yeah. But you know what? In Pinellas County, it's already built out. So depending where you are, it's built out.
Exactly.
There's no more land, folks.
That's
in fact, Pinellas County, this is what ends up happening in Florida. The lots are very small, and the quality of life in Florida is amazing, no doubt. People would come down, even when I come down, and says, oh, this is really inexpensive for what you're getting. But per square inch and per square foot, it's not inexpensive.
Okay.
It's not at all.
Yes, that's right.
It's heavier than Boston. It's not as heavy as New York. But what it has to do with is that they're smaller lots. So when you actually do break it down to per square foot, it's expensive.
Yeah.
But what ends up happening, it's inexpensive on the larger portion for what's coming back. So because of that, once the institutions get in, why would you sell that cash flow?
Yeah, exactly.
Cash flow is king. And you know that there's no more of it.
That's right.
We're not talking the middle of Arizona. We're not talking California. You're not talking where you got a bunch of land. There's no more here. It's done. And now, with our new weather pattern, it's even better.
That's for sure.
This weather pattern,
in the
folks,
70s
is absolutely insane. And it really is. And what's happened is this. Like today it's a little more muggy than it had been, right? Yeah. But the bottom line is like 84 and 85 degrees every day, folks. Normally, and you look right across the country, it's like, you got to be kidding me, man. Unreal. Anyway, market-wise, we get the Dow off 2 right now. Nasdaq's up 12. You get the
IBM really holding the Dow up.
11%.
Yeah, big time. That's the leader in the clubhouse, up $6.80 right now. You only have about a half dozen of the Dow stocks that are up, and several of them up a couple of pennies.
Yeah, and see, what you have. Okay, so watch this. This is going to get cool because it hit 196.85, and 200 is a downdraft with 10 million. It's going to have the volume, so it's going to be like you didn't make it to the swing point. That's what's happening here. You see what I'm saying?
Yeah, for sure.
And if you don't make it to the swing point, folks, you're not, it made a small swing, but the big one,
right.
You're not talking, walking, and squawking. It's getting tired already. So someone's already selling it up at these levels. And all it's going to take is if we get closer to the end of the day, when we get closer to the end of the day, that was pretty crazy. When you get closer to the end of the day, what you're going to see is that going into a Friday, you got to remember something. You're going into a Friday, it's the summer. What ends up happening, folks? Well, bottom line, large money managers are not going to be here tomorrow morning. So what are they going to do? Well, you know what? Sell, sell, sell.
Yeah, yeah. So around the world, you got the DAX is trading up, FTSE trading up just slightly. But do you have any volume or anything?
I do. Well, if we start with the DAX, this is what you have. The DAX took the swing point out. The swing point had 180 million. Well, guess what? It took it out 122 yesterday and doing less today.
Okay.
And you're going into 197 million.
Yeah.
So your correlation's not there. It's 120. So watch. You're going up at 120 versus 180 versus 197.
Yeah.
No way. Walking in the store, no one's in the store buying the product. The FTSE's really...
It was kind of interesting. The FTSE is struggling more than the DAX right now.
Yeah. No, absolutely. And the FTSE, the swing point is 750 million. Well, guess what? You were going into it with 600 yesterday, 596 to be exact, and today's less.
Okay.
The shoe that's going to drop here, folks, is going to be the LIBOR deal.
Yeah.
It's going to be the sharks against the sharks trying to put other sharks out of business. That's how this thing is going to shake out. And because it is larger than all, well, let's put it this way. The lawyers and the regulators, see, the regulators on this one, this is what's going to get interesting. We talked about it yesterday. The regulators are going to be running because the regulators knew what was going on.
Yeah.
And so I think more than likely, most of the regulators basically can't get sued. Because the way the laws are written.
Okay.
Right? But there's, the companies.
They've got immunity from making bad decisions? Oh, my goodness.
Even criminal decisions, probably. But what you do have is this. This is what you do have. You have huge banks. Well, you heard, okay, so I think the first, basically, where's my mic? I lost my mic again? No, I didn't lose my mic. Okay.
We're good. You're good.
Okay. The first shot was fired yesterday, I think, by Lloyd Blankfein.
Oh, was it? Okay, yeah.
And what it was is this. He did it really subtly, folks. You know what he said? He was coming out, and he was saying that, it's disgusting what they did, losing all trust in Wall Street.
Yeah,
This is the CEO of Goldman Sachs. But so check out what that means, though, folks. Goldman Sachs, see, is not one of the banks that sets the LIBOR rate.
Okay.
So picture this. If you're Goldman Sachs, right? If I'm Goldman Sachs, I don't want to be Goldman Sachs. If he's Goldman Sachs, okay, what is the next thing he's going to do? Well, the next thing he's going to do, why not put your competitors out of business?
That's right. Yeah, absolutely.
Go right after them.
That's right.
Now, there's two different things. He can go after them, but he actually will have, Goldman themselves and these other large banks will have a fiduciary responsibility also for the big pension funds that are in there, for anything else that's in there that they have sold and or advised on for the LIBOR rate. So they have standing.
Yeah. So what do you think is the solution then? What's the solution you'd put out there?
The solution is somehow when these guys break the law, they're either going to put them out of business or put them in jail.
Yeah.
No, they do.
Yeah.
How the heck can you go to jail for stealing a slice of pizza and they steal everyone's pension money and they walk around? Or they take all the money. Maybe it has to the point in Wall Street that maybe taking their money is worse than jail. But they've done neither.
Yeah.
I mean, and the evidence of that, folks, is the Fannie Mae Freddie Mac. The guy Raines and the other guy, they got, you're talking about $200 or $300 million.
Right.
And no one's touched them. Not the Republicans, not the Democrats. No one's touched them, and they haven't touched them because everyone's dirty. That's the reality. When you go into the pile, everyone's dirty.
Yeah,
so they're scared to turn around and do a deposition. That's the last thing they want to do is the deposition. The war is on. All those big sharks are in the water, folks, and it's going to be a war. I'm telling you. And it would, more than likely, it would probably. This is still going to take 3 or 4 months to shake out, because they're sitting there right now thinking that, okay, what is their liability too? You know what I mean? It's like, okay, you know, when you start a fight, you got to make sure that, okay, you better win it. You don't want to, you know, and you know everyone's going to get, you know, messed up. There's no way, folks, that you start a fight and you're not going to get smacked around. I mean, you know, it just doesn't happen unless you're Muhammad Ali, you know, or Sugar Ray Leonard. You know what I mean? And there's very few of those, right? Do you know what I mean?
That's for sure.
So we get some action here. And those banks, you know, and a lot of those banks, of course, are foreign banks on U.S. soil.
Right.
You know.
So speaking of, the banks were taking a little bit of a hit yesterday. But Morgan Stanley, I think maybe they were out with numbers before the bell.
They're out with numbers. That's down, let's see, 58 cents. Numbers go like this. Their revenues, I believe, were down. Trading revenues and as trading revenue plunges. The investment bank, they cut 15%. Let's see what it says. So Morgan Stanley reported a 50% drop in earnings and said it will cut more jobs as revenue from trading stocks and bonds declined the most among Wall Street banks. Second quarter profit was $591 million versus $1.1 billion last year. Yeah, big numbers. 48% drop in trading revenue, which plunged to the lowest level. Yeah, 48% drop. Fixed income results were weak. Fixed income is going to be weak, period, because the rates are so low. The firm has already cut 3,200 jobs since the start of 2012, and they expect to climb to 4,000. Revenue dropped $6.95 billion from $9.2 billion. Look at that. That's a 33% drop in revenue. That is
big numbers, too.
That is a big number, folks. That is a big number. What is happening is this. Let me go over to, I want to show you something. Inside the banking business, folks, we pull up Wells Fargo for a second. So you can see Wells Fargo is at 34.19. Now watch how this goes, folks. This is where it gets really interesting about, see, Wells Fargo's at highs. And one of the main reasons is this. The banking community, the broker-dealer community, right? It's all about assets that they can control and then they can move out. Well, the best model has been the banking model, the Wells Fargo model, the J.P. Morgan Chase model now, right?
Okay, right.
That what ends up happening is this, folks, is that people walk into a bank, right? And if you remember, you know, you used to just have tellers. But now when you walk into a bank, what you have is that you have so many of these little offices. Well, inside those offices are all CFAs.
Right.
That money gets dropped on their lap.
Yeah.
Right on their lap.
For sure.
And I can tell you from this is a story that I'll tell you how amazing it actually can be. I happen to know someone that not only money got dropped on their lap, but you know how much money got dropped on their lap? Over $100 million. Now watch this. This is just from the person being a customer of the bank. They happen to like this person.
Yeah.
They had a relationship with them for a year and a half.
Yeah.
And the person didn't even know this person had that kind of money.
Yeah.
Bottom line, walks in, says, you know what? I want to do business with you.
Yeah.
Well, where's the account? Well, here's $100 million to start with.
Yeah.
And
that's a good day.
My God, can you imagine? Can you imagine that? And the end of that story, it's still unfolding, but the end of that whole story, folks, has been successful beyond belief, because this person in particular, all they wanted were basically treasuries.
Yeah.
You know, and this goes back. This goes back about 7 years now, but that's all.
Yeah.
Just billions.
So that's been good. That's been a good trade.
Huge.
Big trade.
Laddering. That's all. This is a continual basis. But that comes out of walking in a bank.
Hey.
Steve Rhodes, Tom O'Brien, appreciate you.
That's good visualization.
Oh man, that's huge visualization. We have the Dow right now up 20, Nasdaq up 20, S&P's up 3.5. We're gonna be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Don't forget, folks, at TFNN, Steve kicks us off each and every trading day, 9 a.m. Eastern Time. You can get all the programming, of course, at TFNN. You can get us on any cell phone. On any cell phone, folks, in your browser, you just go, you don't put a www, you just go TFNN.mobi. And, of course, all you folks on the West Coast, we love waking up with you. Hope you're having a great day out there, safe day. And, it's nothing like being out there at 6 o'clock in the morning. I love the morning. Oh, yeah. I love everything.
Hey, this weekend, I love this weekend. This is a British Open. Oh. So, I got the 5-hour advance. So, and I'm an early bird anyway.
Yes.
4 or 5 in the morning between today, tomorrow. With the full
huge.
rounds going on.
Now, the British Open, that's the reason that's so hard, rather, is that because of the winds and the grass? How does this work?
Well, you got the place that they're playing right now, I think, probably has the most number of bunkers on any course that they actually play at. St. Anne's and the...
St. Andrews, yeah.
Not St. Andrews. This one's called Royal Lytham in St. Anne's. Is the course they're playing. And so you do have the winds off of the water. You got basically, anytime I've ever gone over to Europe, specifically, England, you can get all 4 seasons in one day.
Wow.
And that's what you really have. That's why you always see people always walking around with umbrellas there, even if the sun's out. Because, just in a moment's notice, it seems like all 4 seasons in one day. That makes it difficult when you're playing golf out there. Now, today, there's no wind, so everybody, they're having some really great rounds out there. At least they were before I started the 9 o'clock show.
Right.
And so, but they've got bunkers that, you hit the ball in the bunker and
you can't get out, right?
I mean, you can advance it maybe, 10 yards. But,
really? Why? Because you're looking up so much?
Some are very tall, and they're also not like they're wide bunkers, so it's just difficult to get the ball out of there with any kind of distance. But then you got the rough. Now, they have rough where, it's like wheat fields.
Yes.
You're just lucky to advance the ball. Wow. So great tournament out there, and it'll be a fun weekend.
Unreal.
I always enjoy this weekend.
Listen, folks, don't forget, you stay right there, because coming up next, we're going to Newton, Massachusetts. Basil Chapman's going to be growling proud with you from 11-12 Eastern Time. Then beautiful Santa Fe, New Mexico. Kate Stalt with the Small Cap Roundup, 12-1. Back to Dallas, Texas. Darryl Martin with the Diagnostic Trading Hour. 2-3 today. It was... no programming, but that's going to change August 1st. Then back to California with Ken Shreve, 3-4, and back here at 4-6.
Let's go to Bill in Sarasota.
Oh, that's a beautiful thing. Hey, Bill, what's going on?
Hey, good morning, Tom, Steve.
How you doing, man?
We're hanging in there. I wanted to find out your opinion on United Healthcare. I played an earnings play, and at this point, I'm kind of baffled what happened.
Okay, so let's take a look at it. You got United Healthcare, the lowest 41, the high 60, and what he's talking about is that it opened at a high, sold all the way down, I believe. Okay, so you opened up at 57.59, you're selling down to 54.50. When you have volume at that low intraday, so that means it's going back to that 54.01 to first off, Bill. Okay. Now, let's just say, oh, well, hold it. Yeah, you better get out of town here, man. Okay, so, what you have is this. You see on the 28th, folks, the stock went from $60 to $55.34. The volume accelerated to 25 million.
Gotcha.
That's problematic. When you see something like this, it's so wild. I don't know how this happens, but you see it over and over again. If you get a wild day like that, folks, right? You just don't get one.
Yeah.
You'll get another one, and that's what's happening today. Some large operator does not like this equity, okay? Now, granted, you can wait to the end of the day because you can see on the 28th,
got some support
it came all the way back.
Around 55, 54.90, right around there.
But I wouldn't stay in it after today. Whatever you can get out of it today, God bless you.
I appreciate that.
Okay, man. Have a great one. Have a safe one. You stay right there, folks. We get Basil Chapman coming up next. Have a great one. Have a safe one.